Okay, what's up, people? Welcome back to another live stream. Hope everyone is doing well. As always, guys, if you're enjoying the content, please be sure to drop a like, subscribe. All of that does really help out. And of course, make sure you do go and hit the bell so you don't miss out on any streams or uploads in the future. But we do have a very interesting day ahead. We do have two interest rate decisions coming out later today. We've, of course, got the CAD in the afternoon, and we've got USD towards the evening. Both are expected to remain the same, so I'm not expecting anything crazy, of course, unless that is not true. But we've already seen a lot of movement on the USD side of things, so I wouldn't look to jump into anything at the moment. Of course, I'll go through my thought process with the USD pairs as a whole, what pairs I'm looking at, if any. Of course, I'll go through any positions I'm in as well, and we'll take a look at where I do think there's opportunity in the markets. But of course, we've seen a lot of weakness. So Euro USD has flown, Pound USD, you name it, all seen a lot of upside. And because of this, if you're not already in a position, I wouldn't be looking to jump into anything now, especially with major news around the corner. We've already seen the market expand. We've already seen a lot of movement. So the opportunity is kind of already over. Doesn't mean price can't still go any higher, but I wouldn't be looking to jump into any longs or even shorts to go and fade the move, because again, there's not a lot to support that idea that the market's about to roll over. We could retrace, but not enough for me to look to place a position, anything meaningful anyway. So in terms of Euro USD, in terms of dollar itself, we'll go through a bunch of USD pairs. In terms of Euro USD, because we have just gone and created new highs, my first instinct for Euro would, of course, be some retracement. However, how am I looking to take advantage of that? Well, not really, to be honest. I'm not looking to sell it. Like I said, I don't think the buys are looking good anymore. I think price has already had a big expansion, so I don't want to be jumping into the buys now. Again, not that price can't go higher, but the real opportunity is getting in before the markets had that expansive move. Getting in after means you're a little bit late to the party. Prices, your entry price is going to be not optimal, and you're going to be vulnerable to deeper pullbacks. And that's especially true in FX markets. So I'm looking to the left to see where potential price could be drawn towards. Where we've got this high, which of course was back in 2022, which gave us that massive sell-off, and now looks like price is going to attack that same high. Now, price could very much roll over here. We do have prior lower highs in play, 1, 2, and potentially 3. We've even got prior highs there as well. So this is definitely a meaningful area on a macro level. Now, I wouldn't be looking for reversals. I would wait, for higher time frames to align with that. Would I be looking for buys? Yes, because momentum is still up, but I need healthy pullbacks and healthy corrections. And we just don't have that at the moment. So what I would like to see is potentially move to the downside, maybe after the news comes out, and then market finds support again, and then we can take advantage of a continuation. That's really what I'm looking for a lot of these USD pairs. More upside. Yes, we're being a bit skeptical because of where we're trading. Reversals could happen, but they will most likely be slow and on the higher time frame. So in the meantime, while slower time frames still point up, the opportunity is still likely to be to the upside. So looking for deeper pullbacks, looking for a healthy pullback at least. And then once things stabilize, we find a new floor, and then we start to see some higher highs and higher lows form again, then I could look to take some opportunities more intraday to hopefully continue the swing. And that really much is the analysis, copy and pasted across a lot of the USD pairs. Pound USD as well, very, very bullish, creating new highs this week above this point. We'll see how the candle does close. It's still fairly early on, but momentum is very bullish. And again, we've got the same situation as Euro. We've got the prior highs we have to be very cautious of. What's up, Replay? Welcome to the stream. Hope you're doing good. Lola, what's up? Hope you're well. Yes, we'll take a look at US 30. I did say on the weekend, I do think a lot of opportunity lies with the US indices. So we'll definitely take a look at US 30. But yeah, in terms of pound USD, same situation as Euro. We've been quite bullish for a while. Now we're coming back into this awkward area where, again, lower highs could fall. Now, again, the emphasis is on the word could fall. I wouldn't want to be looking for reversals straight out the bat. These are monthly swing highs. they will take their time to actually form and actually start to reverse. So until we start to see that happen, we stay bullish pretty much. Because again, as a trader, you want to be reactive, not so much predictive. You want to be aware, of course, of what could happen, but you want to be trading what is happening, which is still the continuation of this bullish move. And for all we know, we could actually run past those highs. So there's still a bit of room to the upside for pound. But again, because we are just creating new highs past this point, is this the best time to be looking to buy pound USD? No, I would say this is probably one of the worst times to buy pound USD. Same with euro as well. I want to see healthy correction. And the only place where things would look healthy would be back in and around this area. So yeah, again, we're not guaranteed to retrace there, but that's where I would like price to be if I'm going to take a buy and expecting the continuation of this momentum. So I would really like to see some healthy pullbacks for a lot of these USD pairs. We've had some big expansive moves. So again, if you weren't already in the move, I would say that that opportunity's been and done. And thankfully for us, there's going to be numerous opportunities throughout the year. So we don't have to worry about missing opportunities per se, as long as the opportunities you are taking do make sense. So pound USD creating new highs. Let's see how things develop, especially with major news around the corner. Do we keep expanding? Does price come straight back down? Do we start to consolidate? We'll find out as the day continues. In terms of real opportunity, I would say it does rest a lot lower than where we're trading. So right now, I'd step back away from pound. Dollar CAD, again, a lovely sell-off to the downside. Price creating new lows. Not quite new lows past this point, but of course, we did take out this low very aggressively yesterday. So again, dollar CAD looking forcibly bearish as well. And again, there could be more downside to be had for dollar CAD, but I think this is the worst time to be jumping into some short. It depends on your time horizon. If you're like very intraday, very intra-session as well, you can find a short on the 5-50 minute and be done, within an hour or two, because you're not looking for the bigger run. If you're looking for more of a swing position, anything more than a day, really, I would say is not the best place to be entering shorts. But again, if I was to scale to like a 5-minute chart, you'll find opportunities there. So time horizon is very, very important. But again, dollar CAD is looking very bearish. USD is weak. Again, that's the direction I play at the moment. We need some healthy pullbacks unless you're already in the position. Then, of course, congratulations on that move there as well. We'll take a look at one more USD pair as well. We'll take a look at dollar yen, which is quite interesting because, of course, you still do have that uptrend for the yen pairs. Of course, yen pairs have hit a big bump in the road at the moment, so they look like potentially they could be topping out, but can't say that with concrete confidence to say, okay, it is a reversal or it's just a bit of a break before they do continue. But in terms of dollar yen's case, we've had some very forceful moves to the downside. Of course, you've got a bit of yen strength coming to the market, and now you've got USD weakness. So that recipe has caused a very violent change in direction. And it makes sense of where we're coming from. Major resistance to our left at 159. We've hit that level and we've had a very aggressive reaction. So what's the play now with dollar yen? Well, as I expand to higher time frames, the way I see it, we've got equal lows here. Price found a concrete floor, which we can't break through. We've had a swing back to the high. We failed to break through that high as well. And now we're pulling back into kind of the middle of nowhere territory, where it's kind of anyone's guess whether price rebounds to continue or it finds a high low to continue high. I would say it's really 50-50. So I'll be very, very careful looking for anything long-term on dollar yen right now. Because momentum's with the bears, I would be more inclined to look for selling opportunities. Depends how we do pull back. More inclined to look for selling opportunities, potentially retests of lows here. We do have a bit of a gap we could look to go fill. But again, I would keep it short term. Let's say if price does retrace into there, we react well, I'll be probably out of that position by the time price hits the low, or maybe even before. I wouldn't be confident for a big swing because there's not a lot of information to support that move. Yes, we've rejected here, but price could do a million different things in here. So just being realistic with the opportunities as well. But yeah, dollar yen, because of this violent move, the way we rejected the high, I would be looking for selling opportunities, not buying opportunities anymore. But again, I wouldn't be saying, okay, I'm expecting price to get there. That would be a little bit more optimistic for me to say that. Short term, yeah, I think that's feasible. So I would keep an eye for some pullbacks there as well, and it lines up with the DXY narrative at the moment as well. I'll go through some indices. I'm actually in a US 100 position, which I took last week. Forex market's great. I know a lot of momentum at the moment. I don't know if I'm the only one who saw that we are in a very difficult market conditions. It is flying, did not take any trades. Honestly, yeah, I think that's absolutely a correct assumption in terms of how volatile we are right now. And again, the markets will go in and out of phases. They'll be very kind of slow, like you had over here, very slow price action, predictable price action, or more predictable in terms of a range, short the highs, buy the lows. And then you've got this expansive move here where things are volatile and you're not sure how long that volatility is going to last or if it's going to increase. And to be honest, it just comes back down to what your game is, what your plan is, what your strategies around, what you based your edge around. If you understand that fully, then everything else just becomes information. If things are too volatile, doesn't quite cooperate with your strategy, then of course you step back. If things are volatile, but your plan is still in place, nothing fundamentally has changed, then you can still trade. Of course, you're going to have to manage that stop loss size. If you have like a fixed 20 pip stop loss, but volatility increases and ATR increases, that fixed 20 pip stop loss is going to get eaten up, of course. So you need to understand that too. But absolutely correct. If things are not looking crisp in terms of the way you want to trade, then of course that is the time you want to step back and not take any positions. To be fair, I haven't touched FX in a few weeks as well. I've been focusing on NAS. Just because I haven't really seen anything set up the way I wanted to. And I've been looking at other markets and NAS kind of, and other indices as well, give me better opportunities too. I'll go through US 30, then we'll take a look at S&P and NAS, and of course, any other requests, put it in the chat. Right here, we just went through dollar yen. Let me know if you do want me to go through a specific time frame, by the way. So yeah, let me know so I can be a bit more useful. But in terms of US 30, now US 30 I don't really like that much. Out of the S&P and the NASDAQ, US 30 I didn't like that much because coming into this week, we just had a really significant reaction at the high here. Let me go back to the daily chart. So yeah, this was Thursday, that was Friday. So price came back into the high on Thursday, rejected, and we closed pretty bearish on Friday there. So basically what I'm seeing here for US 30, still a very bullish market. If we zoom out, look at the context, market's still very consistent with the higher highs and higher lows. It's just that we found resistance, we found the high here, and we've had about 6 or 7 reactions at this area. So it's proven to be very stubborn. And this eventually will lead to one or two things. The market has a deeper correction because there's not enough buys to eventually break that level. So we'll have a deeper correction, maybe something like this or something like this. Or the market is just going to build up and then eventually explode higher. Either way, I don't really want to be trading inside of that area because that's where the indecision is. That's where I wouldn't really have much opportunity. Once price makes its mind up in terms of a breakout higher, as long as it's not a false breakout, of course, or we do have a deeper pullback, maybe back into more significant structure, then we can base trades from there. Either of those opportunities, all those situations do present good opportunities. Right now, US 30 is, I would say, in a consolidation. That's more or less the low, even though it's not quite clear. So in terms of US 30, lower, I would be very, very careful trading this one. I mean, I will probably even mark this out as an important level. So yeah, I would be very careful trading this one unless you're just looking for quick scalps, quick mean reversion opportunities. Price hits a level, starts to reject it. You can probably extract, a quick short-term opportunity off that. I wouldn't be looking for any swing position because the market is basically stalling right now. So you're basically predicting a breakout off nothing really. So if you're trying to find some quick short-term trades off a level like this, yeah, I would say that makes sense, especially if you're intraday. Anything more than that, yeah, you might be fighting the grain a little bit because we could easily come back down or we could eventually break lower. If you're looking for momentum trades, then it's pretty self-explanatory. Wait for price to show momentum, break the highs, stay above the highs, and that could be a very nice trade there as well. If the trend is going to continue, if momentum is going to persist, let's wait for momentum to enter the market, prove it's staying, and then take trades off the back of that. And of course, essentially, we're looking for a breakout there. So it depends what you're after. If you're looking for short-term mean reversion, there are opportunities there. But again, the emphasis is on the short term. If you're looking for trend following momentum plays, there is no momentum right now. So let's wait for that to enter the market. And hopefully above this high, 49,500 roughly, there could be some nice plays there to go higher. But I've been very bullish on the indices. Like I said, I did jump into a NASDAQ position. I mean, I've been fighting with NASDAQ, to be honest. I had two positions. Was it last week or the week before? Maybe the week before. Yeah, the week before I had two positions. One position went pretty well, managed to bank a bit of profit, but then it hit this resistance and then stopped me out. The other position didn't go well at all. Had some nice initial movement, but then price rolled back over. Then we had a deeper correction into this zone, and this was my last point of call to maintain that bullish bias. I said if price can maintain this area, I would stay bullish. Why? Because we're still maintaining these higher lows. And the reason why I liked NASDAQ is because we haven't approached highs, prior all-time highs since the 31st of October, roughly. So it's been a few months now before we've actually reached highs. If you look at the S&P, if you look at US 30, we've been making new all-time highs for quite a while, month to month, whereas NASDAQ has just been lagging behind. So that's why I said NAS is a good opportunity, because this is another major US indice which isn't doing what the other US indices are doing. It's lagging behind. So the catch-up trade makes sense. US 100 has the catch-up opportunity to catch up with the other indices, and that's basically what I'm trading. So as long as the market maintains structure, which it did, then the buys remain valid. If NASDAQ was start to break structure, well, that wouldn't make any sense. Even if US 500, even if US 30 is very bullish, if we are breaking lows, then yeah, that means we could definitely go lower. But yeah, we didn't. We maintained lows. I still maintain the position. I entered this one last week on Wednesday, so it's been a week now. And momentum has picked up, and we've managed to break highs, and we're attacking these highs to our left. I'm going to hold the position through that, because typically when we do have these positions where NASDAQ is playing the catch-up trade, and of course it is an index as well, I do expect to see new highs being created. But again, I will be looking to trail a lot more aggressively after that happens, because we could still have deep corrections, and that could take away 90% of my profit. So yeah, NASDAQ is looking pretty healthy. I said on the weekly analysis on the weekend, I do think the indices look good, especially NASDAQ and especially US 500. US 500 was trading around here as we start for the week. I said there's a good chance price could push back to highs. We had a deeper correction the week before. Price pulled back into demand zone, very strong reaction. Market is still bullish. I would expect us to push back to highs. And of course, the market has maintained that momentum, and of course we've just made some new highs there. US 30 was the only one which I didn't like, because we were rejecting highs. I still think US 30's got opportunity, but again, we need a breakout there. So now that S&P has made new highs, well, I would say the opportunity's gone now. We'll see what happens next, see how far we continue. When we have a correction, NASDAQ is pretty much back at highs as well. So I would say, again, maybe unless you drop lower, the opportunity's kind of already gone there as well. But yeah, my focus has been a lot on the indices recently, especially NASDAQ. Okay, where was I? I'm good. Shiny yellow metal. Welcome to the stream. Hope you're well. Plays with gold. Okay, we can take a look at gold. I'm just going to ride this to 550, 500. Looks very possible. I absolutely agree. I mean, at this point, I wouldn't put a cap on gold or silver at all. I've been on the sideline just waiting for a pullback, but I feel that might not happen until 2027. Is there any chart of the day for an A plus setup you're eyeing up this week or soon? Good question. We can go through the gold situation first, and then I'll share markets which I'm looking at. Nothing's really A plus right now, to be honest. There's markets which could become A plus, which I'll talk about, but there's nothing I'm looking to pull a trigger right now, to be honest. In terms of golds, I mean, I'm literally in the same boat as you. I had talked about golds on the weekend, on the weekly analysis. I said gold's just looking super bullish at the moment. And to be honest, looking to take any pullback actually makes sense because, of course, I come from a Forex background, so I'm always looking for slightly deeper pullbacks intuitively. It's not even necessarily a part of the plan. It is a part of the plan, but just instinctively, when I look at the market, I'm looking for deeper pullbacks because FX, they normally give you deep pullbacks, and buying shallow pullbacks, unless you're looking for very short-term moves, is normally not the best play for FX because it mean reverts, it chops around. If you're not buying deep, it's going to be FX can punish you a lot. Gold can do that as well, but of course in this bull cycle, absolutely not. That goes out the window. Pretty much any decent pullback is a good pullback as well. So coming into the week, I did say for gold, keep an eye on this area. This is where we were trading. That's where we were trading. So we had this bearish candle on the 4-hour chart. We had a bit of a consolidation. Looks like price was breaking out. And of course, we had the gap to confirm that. So I said, if price can come back and retest this, even though typically I would look for deeper pullbacks than this, but I said this would be a zone that I would be interested to buy just because of the momentum. We didn't even see a pullback to that area. And then we had another consolidation and prices broken through that again. And again, no retest. So it's just pure momentum here for gold. The next big psychological level would be 5,500, which is up there. And again, that's not too far away. And judging how we're moving right now, I wouldn't be surprised if we get there soon. So the question is, well, how do you want to trade this? Well, I would say 4-hour is probably just too big of a time frame. I would probably say drop to like a 30-minute chart. I wouldn't want to drop too low for gold because, again, the idea for gold is not the quick intraday moves. The idea for gold is finding a good position. It doesn't have to be excellent, just a position really, and just sit in the trade. That's really where the money is. The money is not in like a short-term play like this, back to highs. You can find that in FX all the time. The play with gold right now is this. So you don't want to drop too low because then you're kind of trading a bit more on the noise side of things. So I'd say 30-minute is probably a nice soft spot, maybe 15 as well. And again, looking to buy these type of dips here. And they will feel a bit awkward, but because of the momentum and because of the trend, it actually makes perfect sense. And again, as long as you're managing your risk, that's all you can do at the end of the day. But even a pullback into this structure here, that feels awkward to me. That feels awkward. I'll never really take a trade like that in FX, especially when the market's already had a big move. But it does make sense. And if you do get stopped out, it's a worthy trade to get stopped out for. I would also say this area looks natural as well. If you get a slightly deeper pullback, but again, a pullback that big, you might be asking a lot there from gold. So really to take advantage of gold, you need to be a bit more riskier in a way. Not in terms of capital, but just in terms of the aggressive nature of the trade. I need to drop it a little bit lower down because on the 4-hour chart, which is the chart I spend most of my time on, opportunities have been quite slim. We've had some deep pullbacks, and then after that, it's just been pure shallow pullbacks since the 30th of December. Price has just been ripping to the upside. So it has been quite amazing. I can't lie. Actually, what's up, my man? Welcome to the stream. Hope you're doing good. I appreciate the message, guys. Do drop a like, share, subscribe. All of that does really help out. Does help promote the channel. So I do really appreciate that. If you are enjoying the content, show some love. It does really help out, and I do appreciate everyone who has liked and subscribed so far. What's up, Ashley? Hope you're doing good, my man. I'm in silver, up 7% on a personal long. Nice. See that's the type of opportunity that you'll see that comes, once every 5-10 years. Maybe not 10 years, maybe 5 years. where you can take a position. You're not risking anything crazy, but because of the pure volatile nature of the market and the cycle we're in, this kind of looks similar to crypto situations where someone gets a good price in Bitcoin and it just exponentially rises. It's not necessarily that, the trade you risk your whole account, or of course you could have done, but just because of the cycle itself, it's just so rewarding in terms of the return opportunity. You won't get that in FX. FX is not exponential like this. It will have its time where it does pick up volatility, but not to this extent. Gold and silver metals, they do have their cycles every few years where they do go into really aggressive moves like this. And even not every cycle is as rewarding. I mean, this cycle is actually insane, really, if you look into it. If I go to the monthly chart, this cycle, I would say, is probably even more aggressive than the cycle we had here. And that cycle was post 2008. So we had a massive crash during that time, and gold would have been heavily bought because of that. This is just monstrous. So yeah, getting those positions, getting those cycles is kind of not necessarily even just finding a good trade. It's more so just buying the right asset at the right time. So congrats on that one, Bashi. I was in gold, but it had to close. There's too much exposure, but it's okay. Yeah, fair enough. As long as you extracted profit, good position. I've recently been in trading gold 1 minute due to the fast moves on direction. Yeah, you could do that as well. I'd just say, as long as you manage your risk, is the most important thing. I personally wouldn't drop further than the 30-minute time frame, to be honest, even if I was trying to be aggressive, just because you don't necessarily need to be on the 1 minute chart to catch moves like this. Of course, if you are, it's going to do you the world of good because you have a very, very tight stop loss. So risk reward is exponentially higher. But of course, the downside of that, any kind of small volatile moves, especially during this time, easily taking you out the position too. So it's a trade-off. The 1 minute more aggressive, bigger risk reward, more prone to getting stopped out, especially if you're not careful, especially if you're trading into news. And gold is a very volatile market, even in a bull cycle or not in a bull cycle too. So it's a trade-off. But again, trading is about trade-offs. For every pro for a decision, there's going to be a con. Even 30 minutes not going to be a perfect chart as well. I find it has a nice balance for a cycle like this. Typically, I wouldn't even trade gold on the 30-minute. So yeah, it makes sense. And of course, silver absolutely flying as well, and not as aggressively at the moment as gold, but over the past few weeks, few months, it has been more aggressive. So silver showing absolute momentum. It's trading at 115, almost at 120. It barely even paused at 100. It pretty much didn't. Next big psychological level, you got 150, which is insane. You're probably looking at 125 as the next kind of pit stop between the two. And yeah, not much signs of us slowing down again. I mean, yeah, we've been pausing a little bit, but it's nothing to say that we're about to turn around. So yeah, it's just the opportunity of the cycle itself. And that's why it's very meaningful, because eventually the cycle will be over and then normal trading conditions will come around. And that's where things become a little bit more like FX like. But in this scenario, it's just, okay, we're in a cycle, keep buying the dips until proven otherwise, really. Gold, silver, 30-minute is good. I agree. Yeah, I would say so as well. I would say if you're looking for the best conditions, typically like Euro USD will provide the best conditions just in terms of how volatile the market is, spread, execution, liquidity. Euro USD will provide the best conditions for even intra-second trading, which is mind-boggling to me. But Euro USD will have the best conditions. Gold has good conditions, but it's more volatile and more punishing than euro. Spreads can widen quite a lot with gold. And even though you might have a fairly good condition on a 1 minute chart, that condition can change dramatically, even outside of news as well. It doesn't have to be news that cause spreads to widen with gold. Unlike Euro USD, which is infinitely more liquid, it's going to take big events to move Euro USD, and spreads will widen, but they won't widen as much too. So you've got more protection there. So that's why I would be a little bit careful going 1 minute chart on gold. I would just say be prepared for more kind of small losses. But of course, if you catch the right trade, you don't know how far that can go. That could be a monstrous return. You catch the right move, you got a tight stop loss, that could be a monstrous return. So I definitely understand the trade-off. Absolutely. Have you been where you've been? Yeah, I've just been. To be fair, I've been scaling back down the streams because I want to focus. Well, I've got a project I'm focusing at the moment, so that's taken a lot of my attention. But yeah, I've just been still trading. I still show. Still post my analysis on the weekends and still update you guys when I can as well. I haven't been trading as much, but I'm still actively in the markets. So I've been focusing a lot on Nasdaq over the past maybe 3 weeks now. I'm in a position for that one at the moment. I did get two early positions, which did not go to plan. I had one position over here, second over there. Looks like this one is playing out nicely though. I haven't really been trading much FX. Haven't really found much opportunities in FX. I've kind of I've tailored my trading hours to just in the morning to like an hour's worth in the morning. So if I don't see anything in that hour, I kind of just pack up the shop for the day. Which, to be honest, in terms of just like mental clarity, in terms of stress, in terms of just making everything smooth, it actually is. I would highly recommend to do that. Of course, in terms of pure optimal performance, you do want to expand your trading hours a little bit more than 1 hour a day. But if you're just looking for consistency, I would actually recommend that quite a lot. It's nothing really I've done before, to be honest. So that's why it's really interesting to me. But yeah, I'll still be trading, but focusing purely more on indices at the moment. And one of my goals this year is just to make sure that I'm trading markets which are aligned with the move I'm taking to a higher level. So, if there's a pullback on, let's say, Euro USD versus a pullback on like the S&P 500, primarily because of my background, I'd always gravitate towards Euro USD. Comfortability, I've traded it a million times. I know it pretty well. Indices, I've only started trading maybe the past 2 years now, more actively in the past year. But because of the nature of the market, it actually makes so much more sense to take the pullback on the S&P rather than Euro USD, even if the technicals do look good and it makes sense. I mean, you could effectively do both, but in terms of what's going to pay me better and what's probably going to work, has a high probability of working, the S&P, of course, makes so much more sense. So this year, I'll probably be trading a lot more indices. Definitely still be trading FX, but making sure that multiple boxes are ticked before I do deploy capital, and potentially trading a bit more crypto as well, but in pockets. Crypto, when it's out of cycle, not particularly great. I'd rather just trade day trade FX, to be honest. But in cycle, similar to what gold and silver are doing, good risk reward potential as well. But in terms of just consistency, because of the natural drift of the indices, I'll be placing more attention to them this year. A lot of manipulation at the moment on 1 minute with this high volatility. Yeah, of course, man. That's really the downside of the 1 minute chart, is that when when the markets become volatile, the 1 minute is going to be the most vulnerable. Of course, every time frame is going to have the effect in some way, but of course you see it tenfolds on the 1 minute chart compared to like a 4 hour chart, because it takes 4 hours for the candle to form. So you have to take that into consideration. But there's one thing I've learned about trading, is that everything has a pro, everything has a con. Whether you're day trading, swing trading, trading the 1 minute chart, trading the 4 hour chart, looking for scalps, looking for swings, looking for moves in the London session, moves in the US session, moves in the Asia session, you name it. Whatever type of strategy edge plan you have, there's always going to be a con to that. Like the 1 minute chart, when things become volatile, it's probably best to actually just step away from the 1 minute chart at that point. Because again, as a trader, you're not here to profit every day. You're here to profit over the long run. And if you can master the 1 minute chart very well, the risk reward potential there is very high, because you'll have very, acute stop losses, very tight, very expansive risk reward opportunities. So you don't need to be in the market all the time. And in fact, if you are, that probably will start eating at your edge quite rapidly. So just picking your moments on the 1 minute chart can be very, very promising. Now, 1 minute for me is just a little bit too fast, so I don't really gravitate towards that. But if you do, use it as a weapon, because it is. And when it does align well, really take advantage of that. And when it doesn't, really step back, because the reason why people like the 1 minute is because it's fast, big risk reward opportunities. So you're in there for the right reasons, but if you don't control that, you'll be taking trades for the wrong reasons, and it will eat you 10 times quicker. As a swing trader, you have to take time to place the trade. Your stop losses are bigger, your lot sizes are smaller. So it's harder to lose everything. Of course you can, but it will take a longer time and it'll be a lot slower. And the advantage of that is that it allows you time to think. Things are going wrong. It gives you the opportunity to say, okay, things are really going wrong. Let me stop here and let me go and take a day to contemplate and think about things. In the 1 minute chart, you don't really have that time. That's a luxury you can't afford. So you have to be very, very strict with your decisions. And if you're not, the market will absolutely punish you. Because of that high risk reward potential, there's also that high risk collapse potential too. You can't have them both. If you want to keep risk small, well, it caps your upside as well. You can't be very, very safe and make it and make substantial returns. You're going to have to be a bit more riskier to make bigger returns. And the 1 minute chart provides that, but if you're not careful, it'll blow you up too. So yeah, when things are volatile like they are at the moment with gold, silver, and very much even in the FX markets as well, again, just being a little bit more careful. You don't have to find a trade today. You don't have to find a trade this week. You can wait 2 weeks, find a really nice trade, make 5R. Who's the real winner there? Of course you are. So you don't need to really push yourself unnecessarily. Trading's all about just picking your moments, really. And the person who can pick their moments better, who can sustain pressure when it's on, is the person who's going to be victorious at the end of the day. Trading is very rarely about winning a trade. It's mostly about operating when pressure's on, which is why back testing is very useful in terms of developing strategy, but not useful in terms of developing that discipline under pressure, because that's really what trading comes back to. You can develop a really nice strategy, but you take a few losses and now everything goes out the window. Well, why does it go out the window? Because you're under a bit of pressure. You're a bit of drawdown. You lost a bit of capital. Do you still have that same discipline to act when things are not going in your favor? That's the real question there. And if the answer is no, well, the market's going to show that to you. If the answer is yes, the market's going to pay you for that as well. And again, easier said than done, but that's really where the skill is of trading. Replay, I think lower time frames is mentally difficult. Long-term trading and long-term trading. True, I would agree as well. Too much emotional and lead to FOMO, revenge trading, etc. Yeah, I would agree too. I would say lower time frames is harder. I've always said that, really, actually. That lower time frame is harder. It's more attractive because of the reason I mentioned in terms of returning capital, in terms of small risk reward. If you look on social media, you see the person with like a 5 pip stop loss and 250 take profit. That looks attractive. How does that not look attractive? But again, if you're thinking long term, if you're thinking 10, 20, 30 years, you still want to be trading in that time, still extracting money from the market. If you're on the 1 minute being that aggressive, you're probably looking to be in and out the markets in terms of exit the markets completely within a few years. Really, you don't really want to be having large capital taking that sort of risk on a 5 minute on a 5 pip stop loss. If you got millions in your disposal, and you're betting that on a 5 pip margin of error, you're probably gonna be pulling your hair out. Um, Especially as you get older and you get more responsibilities too. So yeah, I would highly suggest that if you're looking for long term, there's nothing wrong with 1 minute time frame. But in terms of sustainability, you're probably naturally going to start to go up the time frames as your career progresses. There's nothing wrong starting there. It's a great place to learn. But as you get more capital, as you get more responsibility, as you get older, you probably will start to drift away. Not everyone, some people just hardcore by nature and will stay with the 1 minute chart. Kudos to them. But the average trader is going to scale up the time frames because better conditions, you've got more time to think, less stress. You don't lose huge capital in about 5 seconds. At least it takes time for you to lose that. That itself is powerful as well. And the opportunity is a bit more scarce, so you think a bit more. And that delay is huge. If you keep have to react every 5 seconds to a new candle, yeah, long term it's going to eat at you. It might not in the short term, long term it will. And again, it comes back to your goals. What's your goals? Is your goals just to make a quick buck and exit? Well, then yeah, you can probably spend some time in the 1 minute. If your goal is to be here for the long run, again, you're probably going to shift time frames later on. I mean, even in my situation, I mean, I was never really on the 1 minute chart anyway, but I did start trading on the hourly chart for multiple years, then eventually scaled to the 4 hour, even scaled to the daily at one point as well. But at the moment, the 4 hour/8 hour chart is kind of really a nice soft spot for me. It's not too fast, not too slow. Execution risk is pretty minimal. Can trade different markets. It takes time for you to get stopped out. It takes time for you to take profit. And in terms of the thinking time I have, it's enough for me. But again, even later life, I could even scale to a daily chart as well. But yeah, it comes to preference and really what your goals are really, and if you want to sustain in the long term. I'd rather win a trade while I'm sleeping or swing trades than waiting for some pips to catch them. Go down and up. It's too much pressure. Yeah, I would agree as well. And that's again when it comes to managing larger capital too. I would absolutely rather hold trades whilst I sleep. Some people, that's too uncomfortable for them. They don't like holding positions while they sleep. But I would say your position is probably too big at that point. Not necessarily in terms of the capital, but in terms of your risk per your capital. So percentage risk, monetary risk. It's probably too large at that point. If you can't sleep through a trade or your stop loss is just not in a good position, because if you're risking a healthy amount of your capital and your stop loss is in a safe position for that trade, you can sleep through that. Maybe not initially, but you can develop the discipline to do that. And it just makes things so much smoother, in my opinion. And your long-term horizon is very much aligned with how you're acting. So you can expect to be in the game for the long term. If you're very aggressive short term, I'm not trying to talk down on it. I'm just saying in terms of sustainability, even if you look at many kind of elite traders, in terms of their career paths, a lot of them do start intraday, but eventually they do go higher time frames. This is a common trait to do that, and for a reason as well. Not everyone, of course, but most do. So yeah, I do absolutely agree with that. Anyway, in terms of the markets which I'm looking at, because that was a question earlier. So like I said, looking a lot more at indices right now, but to be honest, I'm just managing my NAS 100 position. There's nothing for me to add into that because we're coming back into the highs now. So this will be the worst time for me to add to the trade, because we've just basically come into the highs. But I am looking for us to break the highs, and then I'll start looking to trail my stops further. Right now they are at break even, but as soon as we get a comfortable break up a high, I'll start looking to trade it below some candlesticks. Not so I can catch an exponential move like what gold's doing. I'm not expecting NAS to do that, But just to protect my downside, then eventually I would expect us to be trailed out somewhere, and I'll take my profits and run. So yeah, NAS 100 still, that's really my main focus in terms of opportunities outside of that. We can go through some FX first. I did have my eye firmly on pound USD at the start of this week, but I just didn't see the retracement I was after. We were trading around here, and I said in the weekly analysis, if we could have a bit of a pullback, I'll be more than happy to pick up some longs. I was expecting price to go and hit this high this week, and we kind of had a bit of a gap in price just ran. So missed the opportunity there, but not to worry. There's opportunities around the corner because I still do like pound USD to the upside, even though we create new highs. But now, because of that, I will need an even deeper pullback before I do entertain any longs again. So I do still see more upside for pound, just I need a big pullback. And to be honest, that's a lot of the situation with the USD pairs. Pound USD, Euro USD, and the USD, dollar CHF as well. I really like dollar CHF. I think there's a lot more downside for this one, because if I go to the monthly chart, I think this one is headed to all-time lows, really, which is the wick low here. That's why I do think dollar CHF is headed to the long term. We've broken out of this multi-year range, and momentum is still picking up to the downside. So this wick here looks very vulnerable. And if you look at the history of price, actually, let me go to FXCM brokerage. You can see basically that's all price has been doing since the early 70s. So the consistency is very high for continuous downside momentum. So this wick here does look very vulnerable. And the fact that we're picking up momentum and this multi-year range is over, I do think that's where we're headed towards. But again, I'm not necessarily looking to hold a trade all the way to that area. I'm just looking for pullbacks now. We've broken out of this range here again. So this becomes an interesting area for a pullback opportunity. I'm not expecting this to set up next week, probably even next month, to be honest, but it's just a market which I know has downside opportunity. And if I just keep my eye on this market over the next few months, it will probably be a nice short opportunity, which I can extract some decent profit from. And I know there's opportunity for us to keep falling lower. So this is a market which I'm just going to keep in the back of my mind for a while now. Of course, because we've already had this expansive move lower, there is no opportunity for me just yet. I need price to stabilize, pull back, and then I'll look for triggers. But dollar CHF more downside. So I'm very bearish on USD. I do think pound is still likely to push higher. Euro dollar likewise as well. So I see opportunity in those pairs, but just because we've had the expansive move and I'm not in the trade, I need to wait for the next one to set up. So USD, I see opportunity, just not in the near future. Yen pairs, I am looking at some shorts. I like, is it Euro Yen or GJ? I forget the one. Yeah, Euro Yen I do like. Reason why I like Euro Yen, because every time price does make a new high in terms of the past 3 highs, we keep coming back to this support level. So we formed the high, found support, formed a high, new high, found support, formed a new high, and again found support again, and this time actually broke through. So I'm seeing a strong characteristic of a market that is very tired. Therefore, I do expect to see some downside for dollar, for Euro Yen. Am I looking for reversals? Absolutely not. This market is still way too bullish for me to anticipate any reversal. If anything, it could be a bit of a timeout, a bit of a correction, and we could be back on our way again. But I don't need to look for a big reversal for a successful trade. All I'm looking for is potentially a pullback to take it back into this low here. So I'm kind of waiting for us to see if we can push a bit higher, just so the trade is a bit more meaningful. I'm not going to try and predict any of these lows here to be taken out. I'm only going to look for a pullback back into this low here. So I like Euro Yen. That would be my favorite out of the yen pairs. Pound yen looked okay, but I like Euro Yen's market structure a lot better. It's similar in terms of we're still coming back into support, but the way I see it with pound is we're a little bit more flatter, whereas Euro's got slightly better trend at play. But essentially, it's the same trade as well. A bit more upside. There's a bit of a gap here we can go fill, and then maybe a push back into lows, and then that'll be the trade over. So I do think there's some temporary shorts there for the yen pairs. Dollar yen, same sort of trade as well. I don't like it as much as euro pound, but same idea there too. CAD yen, similar idea, but again, I don't like it as much. And especially with this one already broken through some key structure as well. So yen pairs, I do think short-term opportunities are there. All right, take care, Bashi. Have a good one, man. Appreciate you coming on. What's up, Alex? Yes, we're going to take a look at Bitcoin and oil, no problem. So yeah, yen pairs, I do think there's some short-term counter trend opportunities there. In terms of BTC, I'm still patient with BTC. We broke through structure last week, and I didn't like that one bit, especially because I had a bullish bias for BTC. So the fact that we went and broke through structure here does not sit well with me in terms of longs. I mean, not that we can't still see upside, because I wouldn't say this low is essential or pivotal in terms of direction. So we could still take this low out, redeem structure, and still continue. And that's actually kind of what I'm looking for now. But because we have broken through that structure, it does prevent me looking to buy, before price recommits to new highs. Because if anything, this is a break of structure, which could lead to more downside, maybe threaten that low there. So I'm still very bullish on BTC, and that primarily comes from the weekly chart. You can see prices coming back into consolidation here. We spent, how many weeks trading at this level, still rejecting pretty well. Price looks like eventually it could be looking to pick up momentum and push back to highs. And that's still the trade idea I'm looking to take advantage of. Price tests this area, rejects it, goes back to the next area, which would be up here. This is the tradable opportunity I'm looking to see if I can catch. But it's just a bit too early to predict that or jump into a position, because at the moment we're breaking lows. So if we can start to break highs again, well, that shows me that, okay, the buyers are back in control. The odds of us continuing higher go up. And now the trade becomes feasible. The trade actually makes sense again. So BTC, not interested in sells, primarily because of where we're trading into. I don't really see much logic shorting into that from a swing perspective. From a bullish side of things, there is real opportunity to the upside. So just waiting for that to take shape, and then hopefully some trades can shape up. And in terms of oil, had a look at this one last Wednesday. I didn't look at this over the weekend. So yeah, last time I looked at oil, I think we were trading around here somewhere, and I said, price is still maintaining support. So the bias is still bullish, but I wouldn't be looking to bet on a big move, even though we're kind of seeing a big move happen now, ish. But yeah, with oil, we still maintain support there, and that kept the bias bullish. And then of course, eventually we did break out, nice pullback and a nice continuation. We have taken out highs here as well. And I do think there is still a bit more upside here for oil, but I would be, again, just very careful, because we are counter trend. If I zoom out to the weekly chart, we're not in line with direction. I know we're bouncing on support here, and we're doing a good job at that. But you can see the continuous lower highs there. So the higher price goes, the more we're threatened with this move here. And I would say that threat becomes very real once we push into this area. And if you see it better in the daily chart, which is kind of like a big supply area, which gave us our last, kind of full swing to the downside. So I would say anywhere between 64, 65, this is an area prone for some downside. It might not give us the sell-off, but it might be a pullback before more upside. Who knows? But if you're looking from a bullish perspective, I do think short-term buys make the most sense. Sells a bit too early. I would wait for price to push a bit higher before looking to sell. And I like the fact that we are still creating new highs. So what I would be looking for oil would be a short-term pullback into this area, maybe scaling to like an hourly chart, and looking for something like this into structure. And then that would be my trade back into highs, maybe back into that daily zone over there. So I'm still taking advantage of the trend at play intraday. I'm still aware that higher time frames are against me. So as soon as we come back into this high or even here, I'm looking to start scaling out that position, or at least protecting my downside. I don't still have risk on at that point. And I can still take advantage of a short-term move there as well. So I do like oil. Short-term upside makes sense. We've been very persistent since the bounce of that support level. But it's just, okay, let's not get too carried away with this bullish move, because we are still bearish in higher time frames. We are still pushing into some significant structure to our left. So let's keep it on the short term in terms of the trade horizon. Not looking to bet on a move like this, because you're asking a lot there from the market. Not that we can't do that. It's just you're basically saying that, okay, I'm expecting the trend to be more or less over, which we can't really say with much certainty. So something like this, you're not asking too much. Logical move back into structure, provided we reject it as well. And then we'll see. Maybe you roll over, maybe you break out. We'll analyze that, hopefully next week sometime. So yeah, BTC and oil. BTC swing looks good. Still not really ready yet, in my opinion. Oil short term does look good. We got push back to highs. Can get my words out there. It does make sense there. So keep an eye on that as well. We do have CAD interest rate coming out later as well, and US. So I'm gonna keep an eye on that. But to be honest, US interest rate, I'm not really too. Both of them really. I'm really not too concerned with, because I'm only concerned with interest rates and big fundamental news events when things are congested. If we haven't really moved for a while, because normally those events potentially are the catalyst to get us moving. So, and typically I want to be in the trade as well before the move happens as well. So I want to already be positioned, anticipating where price is potentially going to go, and potentially the fundamental news event is the catalyst for that. If in this situation, which we've got a lot on the FX markets, indices, gold as well, we've already got big moves in the market as well. So even with the news coming out, I don't see opportunity, because the opportunities already happened. So right now I'm just seeing if the news either adds more fuel to the fire and we keep falling, which means the need for a correction will increase and eventually will happen at some point, or does the news itself give a correction? And that's interesting, because that could provide opportunities later on, and hopefully some continuations if things do look good as well. So from a fundamental perspective, because the markets have already given us volatility before big events like this, the fact that we're having more news is just kind of more fuel to the fire. And I just want to see how we react. There's nothing really to take, euro, pound, gold flying, indices flying, unless you're in the positions. I wouldn't be looking to use the news today as a way to see if I can position myself well on a technical side of things. Fundamental, of course, can give a bit more clarity in terms of what we could expect later on, but from a technical perspective, moves already happened. So I'm not so concerned with news at the moment, just mainly waiting for price action to stabilize. But yeah, like I said, currently only in the NAS, so I'll see how that does go. I do see short-term sells in the yen pair, so keep an eye on that, but I'm looking for some higher pullbacks, particularly euro yen. USD pairs, they've already had some violent moves this week, and I'm not in the position, so I probably don't see a trade for me for how I look at the market in the next maybe 2-3 weeks. I'm going to have to be very patient with the USD pairs. I'll continue to manage NASDAQ. If some of the indices do take a bit of a breather, I might look to see if I can hop into the S&P as well. NASDAQ, there's no risk on the table, so I don't mind transferring that risk to a new position on the S&P, maybe if there's a pullback there. And then, yeah, I'll keep an eye on the yen pairs for some shorts. And BTC is still a while away for a trade, so not much to say there. But guys, we have reached the end of the stream. I hope you have all enjoyed it, found it useful. If that's the case, drop a like. It does really help out. Subscribe to the channel, share it with your friends. Does already help out. And of course, hit the bell so you don't miss out on any streams or uploads in the future. Again, I will be live next week, Wednesday, as always, same time as always, 10 a.m. to 11 p.m. UK time. So if you're free, pop in, come say hi. And of course, I will post my analysis on the weekend, recapping this week's price action forecast the next and my top setups for next week as well. So I'll show where my head's at. But guys, really appreciate you tuning to the stream. Have a great day. Take care. Drop a like before you leave. Does really help out. And I'll see you on the next one. Have a good day, guys.